Good morning, ladies and gentlemen. This is Butch Shellrock, Options University, Monday, August 20th, 2012. Welcome to Market Forecast. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We are not a service that tells you what to trade. We are not implying or guaranteeing any profit. And as always, do not trade with money that you cannot afford to lose. And as we looked at the last week, we saw that as we looked at it on Thursday or Friday morning, we had a whole lot of things that took place during the last week as far as announcements. And so as we looked at the beginning of them, we saw that we had not much on Monday, and then as we went into Tuesday, we had PPI, retail sales, things were coming in good, CPI, housing industry, industrial production, all were looking good. On Thursday, we had our normal jobless claims. All in all, economically, it was a pretty good week coming into Friday. Philly Fed survey was fine. And as we came into Friday, in review, we saw that the consumer sentiment from the University of Michigan survey for August came in better than expected. And when we looked at the leading indicators for the month of July, we saw that that also came in better than expected. Let's take a look and see what we expected for next week. And we'll take a look at next week, and we'll see that on Monday we have very little going on. On Tuesday we have very little going on. On Wednesday, we have very little going on. FOMC meeting minutes at 2 o'clock, which certainly have not moved the market in any, unless there's some big news that's going to come out from the FOMC meeting minutes, which we certainly aren't going to expect. Jobless claims as every Thursday morning, so that certainly will be there. And we see that we have new home sales, which have been actually pretty promising as of recently, and durable goods on Friday. So not a big week as far as economic announcements during the coming week. Let's next take a look at the SPX and see exactly what the SPX did during the last week. And we see that as we look at the SPX, we had a fairly decent week. And we look at the last 5 days, we see that the cycle was up, as it has been for the last couple of weeks. And although it wasn't a huge gain for the week, it still was the fifth winning week in a row and the ninth winning week in the last 11. So if this is what the summer doldrums look like, the bulls would love to see this each and every year. As it stands now, when we look at this, we see that we had our low in June, and from that point we're up almost 11% in this uptrend that we've had since that time. We had higher highs, higher lows, and the higher lows we have demarcated by this line. And we see that the air should be getting a little thin up here as we're sitting at that level of around 1417, 1418. Is it time for a pullback? Are we overbought? Well, it would seem that we've been that way for a while after 11 up days in a row. But we see also that we've got another area up here with our previous high right around 1431. And so are we going that high without a pullback? Well, we'll have to see what happens this week as we pull forward. Not much news coming in this week as we look at economic indicators. So what we may see is we may see some confusion coming in out of the Euro contagion, or out of Asia, or out of the economic news coming from across the ocean. Euro news could also have an effect on the market. Let's take a little closer look at what happened during the last week. And as we look at that last week, looking at those 5 days, we see that we had a big day on Thursday, up almost 0.7%. And so we saw Friday come up. Friday also continued with higher highs, higher lows, but notice could look like a topping pattern. But in order to realize that it is a topping pattern, we need to begin to see lower highs and lower lows, and basically all we're seeing is a very nice little upcycle that's been going on for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days in a row. So we are in an uptrend in an 11-day upcycle, and that's a lot of days without a pullback. If we pull back, where are we going to pull back to? Well, our first target, of course, will be this area around 1380, which is part of where the SPX may return to that 30-day moving average. Let's see what the Dow did in reference to the SPX, and we take a look at the Dow and we see that it didn't have the same type of formation, but we saw that it certainly went sideways for quite some time, and now it's headed up towards that next level of resistance. So nearing resistance on the Dow. Again, another pullback could be appropriate to the 30-day moving average, but so far the trend is your friend until it ends, and it has not ended yet. Look for lower highs and lower lows. The air should be getting a little thin up here. Looking at the NASDAQ, we saw also for the last 11 days a bit of a sideways pattern and then a breakout this week. Much bigger breakout out of the NASDAQ in the last 3 days than out of the other indices that we've looked at so far. Now let's look at the index that's not quite as strong as the others. We're going to take a look at the Russell, and we see that it certainly had a nice move, but notice it still is trading in the same trading range that it's been at for a while, sitting at resistance. So many times what we see is we see the Russell giving us an indication of when there's going to be a pullback or a breakout. So if you see the Russell break out on Monday or Tuesday of this week, you can expect the overall market's probably going to follow in the same direction. If you see the NASDAQ start to pull back with a little vigor, could be a precursor of what's happening for the S&P, Dow, and NASDAQ. So watch the Russell many times as a leading indicator. Looking at the week, we see that all of the indexes, the Dow, the NASDAQ, the S&P 500, the Russell 2000, we see that they were all up for the week, different amounts. NASDAQ up 2% for the week, S&P up almost 1% for the week, and look at the Russell up 2.3% for the week, as it had a big week, but it's still only trading within its normal trading range. We don't have a breakout out of the Russell yet. As we look for the year, we see that we're in double digits in everything except for the Dow, which is only up 8.7%. NASDAQ being up 18%, and S&P up 12.8% as we're reaching those levels that we saw in the first quarter. And if we go to 1431, that's exactly where we're going to end up. All right, next let's take a look at some of the other indicators that we use. Look at this VIX, which has been really trending lower over the past month. And we look at the month, we see the trend is down. Very low VIX, which certainly affects our option premiums, and we're sitting down this at this 1345 level. Now the VIX is low, it means it's time to go, but not until we see some kind of reversal on it. So just be a little bit leery in that we are a bit overextended and we're kind of at some real low levels for the VIX. So we might see pullback in the overall market, which would be healthy at this point after 11 days up. Next, let's take a look at some of the ETFs, which give us an idea of what some of the other in areas and sectors are doing. Looking at the bonds, we'll look at the TLT, which is an ETF for a 20-year Treasury bond. And we see that it finally broke out of that trading range that it had been in and is now headed toward that 200-day moving average. Gave us a big old doji on Friday. I'm sorry, it gave us an inside day on Friday. So we'll see what this has to hold for us as the future. Is it going to go down to that 200-day moving average, or are we going to see a reversal getting higher highs and higher lows as the market pulls back? Watch for it. It'll be one of those great indicators you can use to tell which way the market is going. Looking at the financials, we always, of course, if we're going to have a breakout, expect the financials are going to participate if it has any meanings. And sure enough, you see we broke out of our trading range, and during the last week, had a breakout on the financials, which fits with what our expectations are of the market. Taking a look at oil, we see that oil also has broken out and has had a good number of days in this upcycle, breaking out of its previous trading range. We looked at the USO to give us some indication of what's going on in oil, and we'll look at GLD to give us an indication of the ETF for gold. And we see no breakout for gold, just plain trading within its range. Although it is getting higher lows, higher lows, higher lows, but we'll see whether it actually breaks out looking at this ETF for gold. All right, and with that, let's now take a look at the spider. We'll see what kind of volume we're talking about for the last 10, 11 days. And if we look at this whole section here, with the bounce off of the moving average and heading up in a nice little up cycle, we see that it has not really been supported by volume. The volume has been low, 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 low for the last 10, 11 days. So we're seeing this move up, but we're not seeing any real conviction to it as it's taking place with low volume. So we'll see if we do have a pullback. Like I said, the air should be getting thin up here. Watch for lower highs, lower lows, and you might be able to take advantage on a bit of a pullback. Could be 3 to 5 days. Remember, we always pull back with more vigor than we go up. And so for those of you that are gold members, we will continue on and look at our list of stocks to watch, see what they did during this expiration week here in August, which is supposed to be the summer doldrums. And for those of you that are gold members, hang in there. For those of you that are not, if you'd like to see other free videos from Options University, please watch a little video at the end of this, and it'll give you a website where you can see other free videos. With that thought in mind, this is Butch Chorak, Options University. It's Monday, August 20th, 2012, and we have now entered the next month of expiration, and we're looking at September. September will give us that triple witching day on the third Friday of September. So with that thought, thank you for being here. Butch Chorak, Options University, Monday, August 20th, 2012. And to our gold members, welcome back, and let's take a look at our stocks to watch. First thing we'll look at, of course, is the SPX. And we see that we don't have any changes in our support and resistance levels here than we had when we talked on Friday morning. Our next resistance level is 1431. We have had 11 straight days where we are in an upcycle, trading in this upward trending channel. And we see that we do have a little bit of room to the upside. We'll see whether we're going to hit that 1431, which basically was the high of the year. When we do get a pullback, we fully can expect that we should pull back to this 1380 level. And it's only a matter of time before that happens as the air is getting thin up here. The question is, are we going to hit 1431 when we are first? Or are we going to pull back and then go up and hit 1431? As you can see, 11 days in a row is an awful lot of time to keep heading up. So we've done this on very low volume, but nonetheless, whatever it is that's moving the market is certainly moving it in a bullish direction. Let's take a look and see how some of the stocks did during this uptrend in the last 11 days. We see Amazon had a hard time getting going, and finally this week it broke out to new highs. And so Amazon has certainly been one of those market leaders that has shown good relative strength to the overall market. Next, we'll take a look at another company that's done exactly the same. In fact, has been a market leader ever since earnings, and it just keeps right on running, and that's Apple. We saw earnings take place here. We saw a little bit of a pullback, but it was viewed as a buying opportunity, went down to its previous support area, and then has just headed right on up into new highs, bursting into those new highs as we see Apple has certainly had a nice run during this last move since it had its earnings. We traded sideways into the earnings, and then boom, took off after a bit of a pullback on the earnings announcement, which must have been looked at as a buying opportunity. From Apple, we're going to go to a stock that didn't give us exactly the same kind of look, a stock that led things up last year, but now we see AutoZone has lost some of its pizzazz and seems to be trading in this sideways motion. A little bit of weakness, finally made it back up to the 200-day moving average. Certainly not near its high in its trading range as the market is higher. And we see a lot of volume lacking here in AutoZone as it's not showing us much heading into its earnings, which certainly should be coming up shortly. Last earnings were around the beginning of May. We should have been in it. Let's see. May towards the end of May, and we'll see these earnings coming up. The signal haven't come here yet. So make sure you, before you enter AutoZone, that you know exactly when its earnings are. Remember, my basic rule is do not hold through earnings. All right, then next let's take a look at another stock that has certainly been punished after earnings. That's another reason why do not hold through earnings. Look at what we have right here. Huge volume, earnings, trading up there at 400, and all of a sudden trading down here at 330, down 80 points for the day. Got as low as 280, starting to bounce a little bit, but we're finally heading towards that trading line that we had, trend line from before. If the overall market pulls back, certainly could be some money to be made on this stock as it heads toward and retests that previous low right there under 280. So opportunities with CMG as it does not have the glamour that it once had during the first couple of quarters. Next, let's take a look at Google, which certainly showed us what earnings can do to a company. As Google had good earnings, good revenues, and boom, only has known one direction since then. Certainly a bullish candidate on any kind of pullback as we're finished with earnings on it. We're about a month into the next cycle, and Google is showing us what kind of a leader it can be in the overall market. Looking at good Green Mountain Coffee, we see that it traded sideways, did much of nothing after it had all of its bad news as far as its ownership and leadership, and we see that earnings certainly were rewarded with big volume. There's the earnings, and we popped out of that sideways trend that went right into earnings, and we see that it still has not broken out of that zone, and so may pull back with the overall market. Certainly some opportunities there. Might look at a Condor with Green Mountain Coffee, might look at a Butterfly, those kinds of strategies that you like for stocks that are going nowhere. See if there's enough premium, as we know the VIX is trading very low. Next, we're going to look at another company that certainly had a great run last year, and again, we're looking at earnings punishment with volume from there to there. See, we broke up through the 200-day moving average. We're trading in this zone. With a breakup above this, it may try to close that gap. If the market pulls back, look for it to at least pull back to the 200-day moving average and potentially retest that area right around 470. So potential with ISRG. See what happens as the market does what it's going to do during this week. As we enter the next as we enter the next monthly options expiration period, which of course we will have a triple witching take place in our September expiration. Next, let's take a look at MasterCard. MasterCard has shown us what it means to be a sideways stock, trading in certainly a sideways trend. As the market went up, this went nowhere. So we're not seeing a great amount of movement out of MasterCard. All right, next let's take a look at our next company, which is McDonald's. And we'll take a look at McDonald's. And as we look at McDonald's, we see that McDonald's has lost its pizzazz. Didn't like earnings, seems to be going nowhere. That's McDonald's for us. Now let's take a look at Nike, and we can see Nike's just not doing it, as Nike is spending its time well below its real potential. After we finish with Nike, let's go ahead and take a look at Priceline. Priceline, can we say earnings are dangerous? Way up there at 680, all the way down there at 560. That's from missing earnings or revenues or one of the two. And so we see Priceline is not showing us what Priceline once shows. Next, let's take a look at WW Grainger, trading in its nice upper zone. Had great earnings, looks like a totally different chart than some of the others we looked at, with big volume, and we see that it's trading in that zone. And so any kind of a pullback back to the moving average certainly gives us some potential for WW Grainger. So with that, here we are looking at another week in the overall market, Entering our next options expiration period. VIX is low. Market seems to be a bit overbought. Trade what you see, not what you think. This is Butch Sharek for Options University, Monday, August 20th, 2020.